signs. Mom always said I was born on the wild side. I guess Mama was right. 'Cause when the clock strikes midnight, I'm gonna ride the lightning, feel the thunder, till the darkness pulls me under. Gonna fly on.
Hey, Jacob, can you hear me?
Oh, I was muted. Can you hear me?
Yep, I can hear you. Thanks for joining in. Appreciate you doing this.
Glad to help out.
Yep. All right, I think we got everybody. We're missing a couple, but I'm just going to start. I hope everyone's okay. We are recording this. We're going to put it up on our YouTube channel. We just started a new YouTube channel, so if anyone has a problem with that, let me know. But I've got a lot of requests for, starting a trucking company and how you do it, and what are the barriers to entry, and as well as insurance. That's everyone's biggest question is, how do I get insurance? So we got the guy here that can explain that to us, Jacob. But before we get there, let me just kind of go over a few things. See if this is working for us. Okay, so the reason you would want to start a trucking company is super important. You know, you want to think about your goal here. Are you looking to start a business, or are you looking to create a job for yourself? So there's a big difference between owning a fleet and becoming an owner-operator. And, you know, the steps that you take, welcome, Mike, the steps that you take are going to matter. Your goal matters. You know, if it's just one truck, then you're not going to worry about bringing on lease ops and scaling out and growing your business that way. You're going to worry more about getting a good truck and a good trailer and finding a good dispatcher or dispatching yourself and building relationships and just keeping yourself busy. The insurance monster, we're going to talk about the insurance monster because that's everybody's biggest issue when they try to obtain their new authority and start their trucking company is, hey, you know, insurance. Do I have enough money? Because I hear horror stories. It's going to cost me $40,000. It's going to cost me $20,000. It's going to cost me $5,000. I don't know. I've heard all kinds of different numbers. So we're going to shine some light on that. Welcome, Jamie. Thanks for joining. And then we're going to talk about obtaining your authority. We're going to talk about the numbers. We're going to talk about knowing your cost, good accounting practices, and how you're going to scale that business once you get it to where you want to get it. So first thing I want to jump into is the insurance monster. And the monster is money. You got to have a lot of money to get started. And it all depends. And there's different variables. And hopefully Jake can shine some light on us here. About when to start shopping for insurance. Everyone wants to know, hey, when should I start shopping for insurance? So my first question to you, Jake, is when should somebody start shopping for insurance?
That's a very good question. And I think even to a good point for it is do it even before you set up your DOT authority. Because you're right, insurance is the monster. I mean, it's going to be one of, if not the top most expensive thing to start off with. It's definitely top three outside of, you know, you're buying your own equipment and things like that. So if this is something that you're wanting to do and getting prepared for, I wouldn't argue with you if you started looking at it before you even filled out your DOT information. Because if you do go in and you do get that quote and you're getting a few quotes and they're sitting at $40,000 for the year, why go waste the other money to go put out the DOT information?
Right.
Maybe you could lease on to somebody for a while until the rates get better.
Sure.
So, yeah, I mean, I would say even right off the get-go.
So if I came to you and I'm looking to start a trucking company and I said, you know, hey, Jake, this is my idea. I really don't have a truck in mind. You know, I want to do this. Can you give me a quote? Are you guys able to pull a quote for somebody without the vehicle, without all the DOT information, with just their driving license and record?
Yes. I would say take that quote with a grain of salt, though,
Right.
because so much can change.
Right.
Obviously, if you end up getting a bigger truck than what you want, you end up downscaling and do box trucks instead of tractors.
Right.
So, I mean, a lot of things could definitely change, but yeah, I can do it without a VIN number.
Sure.
I
Okay.
mean, I can run it off of your make and model and give you guys a good idea.
Right.
But like I said, do definitely take those quotes with a grain of salt, because so much can change, as it should, when you're trying to gear up and get ready to launch yourself, for lack of better words.
I get a lot of guys that they call in, and gals, and they say, "Yeah, I got my truck and I got my trailer and I got everything I need, but I need insurance, and I've been calling around and I can't afford the insurance. What do I do?" And then at that point, it's always like, "Well, what is the quote?" And if you can't stomach that, or if you don't have the money, then a lease may be your best option. And we're able to offer a lease to some of them, some we can't. But it just really depends on their situation. So if you're thinking about it and you jump into it, ahead of time, and then you start shopping for insurance, it's not the end of the world if you can't get it. You're just going to have to adapt and adjust. But it's definitely something you want to think about before you just go out there and buy the truck, because you may be put in a situation where you can't afford the insurance, and you're looking for plan B, and plan B is never as good as plan A.
Exactly.
So when we're talking about drivers, Jake, I know from experience and working with you that if I bring you a driver with a good driving record, it doesn't hurt the pocketbook as much. But if I bring you a driver that has a bad driving record, it seems to hurt a little bit more. So can you talk a little bit about, what kind of truck somebody should buy starting out, value-wise, or what kind of driver they should be looking at?
Looking at drivers, you've got your golden boy. He's got to be plus 30, and I don't mean to say just he, because obviously there's a lot of women truckers out there in this world, and they're fantastic as well too. But
Sure.
You're looking above 30, preferably 2 years or more of experience, and preferably clean driving record. If you can find those golden boys, get them and keep them as long as you can.
And that's hard to do nowadays, right?
Exactly.
It seems like everybody's looking for a good, experienced driver with a clean record, and they're like
Right.
they're like unicorns nowadays. You're going to end up paying them a little bit more, but if you can get them, it's gonna save you money. And as we work through this PowerPoint here, you're going to see that it makes a big difference as far as the experience your driver brings. So a good driver is definitely going to make or break you. And then the last question I get is, how much is it going to cost me? So I know you can't answer that question with a concrete number, but maybe you can kind of give us a range of what you're seeing.
I mean, if we're looking strictly state of Idaho, I see good numbers anywhere from 13 or 14 a year. And I see them on the higher side of 25 per truck a year.
Right.
And that's 1,000. That's not 1,400. That's 14,000 a year.
Yes.
So there is a good range. You're right. It's totally hard for me to give you an exact number at the moment. But if you're looking at it, you're looking, I would say, anywhere from 14 to 25 a year.
Yeah, and that's what we've been seeing too. I had a guy call me the other day. Well, it wasn't the other day. It was probably a month ago, and he had a DUI. He had an accident on his record or something, and he just got his insurance bound, and he was ready to go to work. And I asked him, "Well, how much was your insurance?" He goes, "Oh, I got to get to work because my insurance was $40,000." I said $40,000. I mean, how can you even make money after you pay the insurance? It's tough. So
you named off two of the three big violations that they can have. Those accidents are going to rack up real big points. DUIs are going to rack up real big points, and speedings are going to rack up real big points.
Yeah.
So if you have any of those three on your record, you're looking at a guaranteed extra 15 grand probably.
Yeah. It's tough. It's tough, and this is a big obstacle for everybody, just kind of getting into the insurance. So when you're thinking about starting a trucking company, you definitely want to think about insurance beforehand, not as an afterthought, because it will come to bite you. So Straight from Jacob, $12 to $25,000 range per truck. So if we do a down payment on that, Jake, how much money do I need to even get this policy started?
Oh, I would say your minimums usually are looking at 20% down.
20%
I would
down?
say expect that.
Okay.
So that's a $3,000 to $6,000 down payment right there. So
Yep.
be prepared.
Yep, that's what I tell everybody. You got to have some money to put down. So it's not just about, hey, I got a truck. What do I do? You're gonna have to have some money for your down payment on your insurance, as well as others. You got to get your plates, and you got a lot of stuff you got to pay for when you get started. So you can't just jump in with an empty wallet. You got to be ready to go.
Yeah.
So, well, I think that pretty much answered our question. If any of the participants have a question regarding insurance, I see Frank in here. Welcome, Frank. I know we were talking yesterday about insurance, and we were talking about general liability because he didn't have general liability. So maybe this is a little off topic, but since we got him in here, Jacob, can you explain the difference between general liability and auto liability?
That's a very good one because that's a question you get all the time.
Right.
Your auto liability is just basically that's your coverage when you're driving your vehicle from point A to point B. That's if you were to hit somebody, your fault, you cause damages, your liability picks up that. General liability is more like a secondary type of liability for more of secondary parts of your job. So in trucking instances and things like that, you got your primary job is just picking up from one place and dropping off at another. But occasionally you got to load and unload.
Right.
Well, that's where your general liability and things like that will kick in, is because that's not the primary portion of your job. Your transportation is the primary portion. So the general liability kind of picks up your secondary types jobs of what truckers do.
So if I'm getting loaded at a dock or facility and I damage the building or I do something stupid and I cause a bunch of damage there, that's where my general liability is going to kick in. It's not going to kick in driving down the road. It's going to kick in when I'm doing non-trucking duties.
Right. Yeah.
Okay.
Very easy way of putting it like that. Yeah.
And non-trucking is really not a good term to use because there is non-trucking coverage, and as far as like Bobtail goes.
Correct.
So if I have auto liability, if I have all this stuff and I'm bobtailing and I'm not actually working, but I move my truck from point A to point B and I get in an accident, am I covered?
Depending on the provider that you have and the cover or the policy that you have. Some providers like Progressive, if you have primary liability with them, they'll cover you if you, like you said, I'm going to go take the car in and just go get the truck gassed up and cleaned up because I'm taking it on the road tomorrow to go get a load.
Right.
That where you're not actually working, then yeah, Progressive, if you have their primary liability with you, they'll cover that as well.
Right.
Some insurance providers, if you're not hauling, that you don't have the coverage.
Sure.
So that's where, yes, like you said, the non-truck liability would kick in, or the Bobtail liability would kick in.
Right. Perfect. Yeah, I know a lot of guys ask me the difference between bobtail insurance and auto liability. So I try to explain it to them the best I can, but I know every policy is different and every insurance carrier kind of handles it a different way.
And one big thing for a lot of new venture guys that you're going to come up to is bobtail or non-truck policies are a fraction of the price of an auto liability.
Right.
But the auto liability is the only one that you can have that will activate your authority. So
Right.
don't get suckered into going and buying a bobtail policy or a non-truck liability policy thinking it's going to activate your authority. You have to have primary liability for that.
And you have to have
I know
it. The minimum is $750,000, if I'm not mistaken, but the standard
Right.
coverage is $1 million, right? Do you bind any
Yeah,
$750,000 policies?
That's a good trick for a lot of people, especially when it comes down to the money wise.
Right.
If the FMCSA has the requirement of $750 for you, certain commodities being hauled will require higher, like automobiles. You're going to have $1 million no matter what.
Right.
But in some instances where you can get away with just the $750, you can bind your policy at $750 to help offset some funds, And then once it gets activated, you can increase your policy up to the $1 million if you want to.
Yeah, there you go.
So yes, I do see some 750s, but I would say 9 out of 10 of those guys are going to bump to $1 million once they're ready to start running anyways, because
Right.
most people you haul for are going to require it.
And it's not smart to cheap out on the insurance, because that's what's going to cover you if something happens out there. When you hit the road in a truck, you assume a lot of liability. So you definitely want to make sure that you're not cheaping out on your insurance. So hope that helps you out,
Definitely.
Frank. I know we discussed that yesterday. I'll be moving on.
Yeah, thanks, Billy. Yes, it does.
I think you. Oh, hey Frank, that help you out?
Yeah, it did. Sorry, I'm driving, so it's kind of hard for me to keep up with it. But yes, it did.
Okay, perfect. Glad you joined, and drive safe. Okay, and so
Thanks.
I think we're gonna move on here from the insurance. Jake, I appreciate you stopping by. If you want to hang out, you can hang out. We're just gonna go through and we're gonna talk about what it actually takes to start a trucking company, and the numbers involved. Everyone thinks, hey, because I grossed $100 million, that I made $100 million. Well, you probably didn't make a fraction of that, because
Right.
there's a lot of expenses that go into it. So we're gonna kind of cover all our bases here.
One thing before you head off on that one, if anybody does want to have any conversations with me on it, please, Billy, give out my info to any of them. I'm
Yep.
totally fine with that. I'll stick around and listen in on some of this stuff because, surprisingly or not, keeping your insurance agent in mind or in conversations when you're trying to grow or trying to do anything with your company is a real wise idea, because
Yes.
there's so much stuff that you could change that could really affect insurance. So
Right.
I'll stick around and listen some more, and if anybody asks questions that actually helps pertain to it, I'll pop in, and whatever I can do to help out, I will.
Perfect. We love it. And Jake is with Mustard Seed Financial, and I got you guys' logo up here. We've been with them for the last couple years since we moved over here to Idaho, and they've been great. So we love working with you, Jake, and thanks for everything you do. And now we're going to talk about what to look for when you are shopping for an agent, someone like Jake. As you want someone who's knowledgeable, helpful, and resourceful. You want to be resourceful, especially if you're a new authority, because you're going to get a high bill from somebody. Somebody else might be able to give you a little bit better of a break. So it's important to have that characteristic in your agent. Certificate requests. I know with Mustard Seed, we don't wait at all. As soon as we send the request, we get it back. Very very little lag there. So that's big. Especially with us and our dispatch service. I don't know how many times we go to book a load with somebody, and then we're waiting for the cert, and then the broker agent's like, you know what? I already got this guy. He wants to haul the load. He's set up. I got his insurance, and you lose the load because your insurance was slow. So yeah, you got a good deal, but it's going to cost you in the long run. And then out-of-state drivers. Actually, Jake, since you're still here, out-of-state drivers. Could we talk a little bit about that? What are companies doing? Insurance companies doing about out-of-state drivers? Are they allowing them, or it just depends?
That's also a very good question, because a lot of people are looking for out-of-state drivers, and a lot of people are looking just because they're so hard to find that you almost have to take an out-of-state driver.
Right.
On new ventures, it is a lot tougher. Companies that have been together 5, 6+ years or whatever like that, there's some leniency to those out-of-state drivers.
Right.
Also, companies that are full on fleet, there's leniency in there too. But new ventures, so when you're looking new venture insurance wise and stuff you got 3 main companies that are doing it. There's a few others that'll still do it, but you're looking at Progressive more than likely, Berkshire Hathaway, National Indemnity. Those are your big 3. You've got a few that'll do Canal or Lancer, and some others that'll sneak in there every now and again. But majority of them, outside of Progressive, will have some sort of out-of-state driver requirement,
Right.
or restriction, or plain won't even quote it.
Right.
Berkshire Hathaway won't touch a driver that's outside of 150 miles from the garaging unit.
And why
location?
And why is that? What do you think the insurance companies are trying to protect themselves from?
A big part of it is when you look into rating and things like that is the garaging zip code. And so they base all of their rates off of where this truck is being garaged,
Right.
which honestly seems weird because who's garaging their vehicles? Most of the time they're out on the road, right?
Yeah, if they're not running, you're not making any money, right?
Exactly. But so that's where they do a lot of their ratings off of is the garaging zip code. Well, if you go and you throw on this driver out of state, saying we're garaging over here in Boise, but we throw on a Texas driver, well, then they're thinking maybe these guys are garaging down in Texas and this and that, and it's an entirely other rate,
Right.
entirely other risk. And so that's why a lot of the times they have issues with that.
Right.
And so, like I said, Progressive will allow it, but now they're starting to tack on a little surcharge for them.
Right.
Berkshire Hathaway won't touch them if they're over 150 miles away. National Indemnity sometimes will start them, but then require that they change their license within 30 days.
And that's what I was running into before we moved to Progressive, because my company's with Progressive now. But when we were with a different company before, they would accept them first, but then they would request right away that they change your license to the state that we were operating in. So that's an obstacle for a lot of people, especially in this environment where you can't find a driver and you're just looking anywhere and everywhere, and then you find one, and then your insurance goes, well, about that, we can't use that driver. And so all that work for nothing because you weren't aware that your insurance didn't work without a state driver. So know that before you jump in. It's important.
Right. And that's like I said, keep your insurance agent in your pocket so that way you can ask all these questions.
Yep, and it's good. That's why I got my insurance agent in my pocket. He's on this meeting. Thanks again for joining. And then
to help out.
And then growth. I know when I first approached you, I told you, hey, I'm looking for some growth. And you said, well, I'm not sure if they'll like as much growth as you're talking about, but we should be able to make it work. So how do these companies look, especially for new authorities? What if you got a new authority? He's like, man, I'm coming in with 1 truck and I'm going to end the year with 10 trucks. You think he's going to be able to get insurance for 10 trucks on his first year?
Yeah, with one company and one company only, and that would be Progressive.
Right.
Growth, slow and controlled, is approved with most of the providers. Growth 1 to 10 in a matter of days, most providers will turn around and cancel in a heartbeat for that.
Right.
And that's big on new ventures because what they've seen in the past is these companies grow so quick that they're not able to watch their drivers. They're not able to maintain their trucks. They're not able to basically run the company with it. And then next thing you know, you get all these drivers that are out there drinking on the job and getting speeding tickets and accidents, and claims start flying in and stuff like that. So that's why there's a lot of restriction on growth within your first year.
I think a lot
I have one company, Lancer in particular, they will not allow any growth whatsoever at all in your first year.
Wow.
So there's some real strict ones, and then there's some that allow it, but it's got to be slow. You definitely don't want to jump real quick.
Right. Yeah, and so that's something to consider if you are ambitious and you're jumping in. Make sure you're with Progressive. It sounds like, because they're the only ones that are going to facilitate it for you. As far as Idaho goes, you may have something different in another state. We're all from Idaho here, but it varies state by state. So just find a good agent and ask them all the right questions. Ask them some of the same questions I'm asking my agent, and hopefully they have some good answers for you. So growth is a factor, and everybody wants to grow. Most people jump in because eventually they want to grow a fleet. So hopefully that answers all your questions on insurance. We're going to move on to obtaining your authority and lease options. So should you get your own authority, or should you go ahead and sign that lease? And it depends, and a lot of it depends on what we just talked about with the insurance. Refer to the goal. Remember we were talking about when we first started this is what's your goal, If you wanted to just create a job for yourself as an owner operator, then your goal is a lot different than somebody who wants to build a fleet and grow a fleet. So at that point, a lease may be appealing because you just want to drive the truck. You don't want to deal with the headaches of the authority. Or maybe you want to design your own, start your own company and design your own lanes and build your own company the way you want. So, your goal really matters. And then how much experience do you have? Because if you just got your license a year ago and you've been driving for JB Hunt or Swift, and then all of a sudden now you want to jump in and get your own authority, how much do you know about that truck? Do you know how to work on that truck? Do you know what's happening under the hood of that truck? Do you know anything about the expenses on that truck? Chances are, if you've only been driving for a year, you don't. So no, you don't want an authority. Maybe a lease purchase program somewhere, but you got to be careful with those. So if you don't have any experience, I would just suggest getting some more experience before jumping in anything. And then if you do have the experience and your goal is to grow, then obviously you want to get your own authority. How familiar are you with the FMCSA paperwork and the state permits and the IFTA and the IRP? If you're pretty savvy and you know all that stuff, then, maybe jump into it yourself. But it's really easy to do it wrong. I know when I was applying for my state permit for California, I had to do it 3 times because first you got to go to CHP, you got to get a number, and then you got to take that number and put it on your application. And then, if you don't check all the right boxes, it gets returned. Mine got returned 3 times. I didn't know what I was doing. I did it myself. But if I would have just hired somebody and gave them a little bit of money to do it, it would have got done right the first time I got on the road, and I probably would have saved myself the headache. So if you're not familiar, you don't need to be familiar. Just hire somebody that can do that. And that's something we do here, and we do it well. We have experience. We've filed many OP1 forms with FMCSA, various states. If the IRP gets a little tricky, but it can be done. It can be done right by somebody who knows what they're doing. So definitely, if you want to get your own authority, make sure you have the experience and you know what you're doing here. And what about that lease? If you don't want to get your authority, you want to go to lease. There's so many bad leases out there, and we'll get into the numbers in a little bit, but a 80-20 split, that's kind of what we do here. You can make some money, but if you have a 70-30 split and the term is for a year, and you're stuck into that for a year, you may not make money for a whole year. Essentially, you're a glorified driver with the headaches of an owner-operator, and you probably end up getting paid less than a driver. So the terms matter. The settlement process, are they going to pay you every day? I hear it all the time. Hey, this guy still owes me money. He hasn't paid me. Make sure you're going with a reputable company because you may not get paid. It's a dog-eat-dog world in this industry. The split we talked about, you want a good split. You don't want to jump into a lease and give away 40% of the income because there's nothing left for you. The truck's going to eat all the money. You're going to just work for free. Reputation matters, and do the numbers make sense? And we're going to jump into that a little bit more when we talk about the numbers. Cost per mile, you got to know your cost per mile. If you don't know your cost per mile, I can help you out there. Go to my website, 4keyslogistics.com. We have a free cost per mile calculator. Looks something like this. You punch in your truck payment, your trailer payments, all your other expenses, and it's going to spit out a number here. So if you're making less than this number on any run per mile, guess what, guys? You're not making any money. You're losing money. And even if you're right at this number, because this isn't all, these are just your fixed costs. This doesn't take into account that engine repair or that transmission repair. This only takes into account your fixed costs that you're going to have. But those unknown costs are not calculated into your cost per mile. You just never know when you're going to come against that big bill there. So know your cost per mile. If you need that calculator, check us out, 4keyslogistics.com. We have one on our website. You can download it for free. Bookkeeping. I got guys now that work with us. They don't have good bookkeeping practices. If you don't keep track of your money coming in and your money going out, how do you even know if you're making money? You have no idea. You have no idea. You can guess, but you don't know because you can't calculate all all of your expenses in your head. You just can't, you know. You need to put it into a bookkeeping software. QuickBooks. I use QuickBooks for all my businesses, and it seems to be good. There's other ones out there. You could even get a TMS software that will have some sort of accounting software built into it, that'll work for you. That's cheaper than QuickBooks or easier to learn. And if you don't want to deal with this and you don't want to learn this and you did get your own authority, hire it out. There's bookkeeping services out there, so definitely hire it out. You don't want to go without your bookkeeping, because if you're losing money, you'll never know. You'll just be thinking you're making money until one day you just can't find enough money to pay the bills, and then you're out of business. And it happens that quick. Profit and loss statements. If you don't know what a profit and loss statement is, educate yourself. That's going to be the report that tells you how much money you made or how much money you lost. And in fact, we're going to go over some real life numbers right now. I know I have a few people in here that want to start their own trucking company, and they want to jump in and make some money. And you can make money in this industry, but you can lose money just as easily. Let me see if I can bring that up here. There we go. So this is an actual profit and loss statement from 2020, where it shows all the money that was made. It keeps track of it in the income. $1.7 million came in. And you can see a lot of it goes back out, accounting fees, bank charges, business licenses and permits, carrier pay. We use lease operators with my company, so a lot of the money that comes in goes right back out to them, because we do 80-20 splits, because we feel that's fair. A guy can make money at 80-20, but a guy can't make money if he gives away much more than that. So it needs to be a win-win if you do sign a lease. All these expenses. Look at my drug consortium fees, dispatch fees, equipment rental fees, ELD fees, all this isn't calculated. Income tax that you pay, insurance expenses, interest expenses, lumper fees. I mean, it adds up real quick. At the end of the day, how much did we start with? 1.7. All that was left was $108,000. So you can easily lose money, and you wouldn't even know it. So it's a good idea to keep track and to take all of these into account when you are, running your numbers. You want to know if you're making money or if you're not making money. And then I think this is our last leg or close to it. How to scale. So now you've decided to jump in. You've got your authority. You've got your insurance. You're ready to go. You've been running some loads. You're keeping track of your numbers, and you're making money, or it looks like it. And now you want to add another truck, or you want to grow. You've already asked your insurance agent the proper questions, and it's okay. They're going to let you add another truck or two or three, whatever you want to do. And there's a couple ways to grow your company. Is Jake still in here? Jake is still in here, so maybe he can add a little bit of insight here when we start talking about lease operators versus company trucks. So with a company truck, you're essentially just buying another truck. But with a lease operator, you're hiring that out and you're bringing on somebody else's truck and a driver. So Jake, maybe a little bit of insight on how the insurance companies are looking at these two different methods here of adding trucks.
Yeah. And both are used quite a bit. So in my opinion and experience with most of it, and seeing from what some of the providers are going to request, is owning it yourself, I think, is going to get you further than doing the lease operators, owner operators. And reason being, it goes to the sentimentality of it. It's yours. You own it. Yep. You're going to take a little bit better care of it.
Sure.
So I think that's why, like, if I go back to my Lancer, they won't allow growth in the first year, but in the second year, they will let you add another company-owned truck.
Right.
And so, and I think I said it goes to that. It's your baby. You own it. You'll take a little bit better care of it. Owner-operators are great ways to increase and start bringing in some quick profits because they're already ready to go.
Yep.
with adding anything, though, be in mind that it goes back to the FMCSA stuff that you have to have in, and that's your federal filings.
Yep.
So any filing is going to state that you have any company-owned or operated vehicles have got to be listed on the policy. So even if said owner-operator's got some insurance elsewhere, if they're going to put your name on the side of their truck and haul for you, you've got to have them on your policy.
Yeah.
So once again, keep your insurance agent in mind, and that way he can work up quotes and do all that kind of stuff like that. Billy sends me them all the time, and I work up a quote, flip it right back to him, and then he makes the choice.
Yep.
So it's once again, keep that in mind with your insurance agent. Keep them in your back pocket, and that's what they're there for, or they should be there for, anyways, if they're doing it the right way.
Right. Yeah. Exactly. And so when you're thinking about company trucks and lease operators, I've found that the company trucks, it's harder to scale that way. It's a lot easier to just find a lease operator and throw them under a trailer and off you go. And in fact, you make almost the same amount of money if you do it right, because you pass most of the expense on to the lease operator. So as far as scalability goes, it's going to be easier to scale lease operators than company trucks. But the pros and cons, the pros are it's cheaper and faster and easier, but the con is you lose some of the control of the truck because it's not your truck, it's not your driver. You have to kind of work with them. They don't work for you, they work with you. So you do lose some control in that. And I think that's kind of why we see insurance companies, look at it twice before they bind a policy for a lease op versus just another company truck.
Right. And one other little ticker on this part too, it's commercial auto policies aren't like personal auto policies where you get multi-vehicle discounts and stuff like that.
Right.
They look at commercial policies as we've got 2 big trucks on the road. That's basically double the exposure, double the risk.
Mm-hmm.
So when you're going to look into adding another vehicle onto your policy, you had better expect your rate to double.
Yeah.
Your monthly bill to double. And also be prepared to possibly have to put down another down payment to add those vehicles.
Yeah.
Some companies like Progressive is great because they don't require you to do the down payment up front. They just kind of bill it out for you and expect your next bill to be high, and then it levels out after that.
Right.
Some other providers won't. They have to have that down payment up front. So if you want to get somebody running for you, be prepared to spend some cash to get them going.
Yeah, that's it. So I know when we add them, I will send you the request and I'll get back. Oh, this guy's going to cost you $7,000 to add to your policy, or $10,000 or $15,000, whatever it is. And then you go, all right, well, what's that calculate out to? And then you pass it on to the guy and you're like, well, this was going to cost you. And if they like it, they'll buy it. If they don't, then they'll look somewhere else. So it really just kind of depends. What your end goal is here and how you're going to do it, and your insurance provider and all that good stuff. So, definitely something to think about when you're thinking about scaling, how you want to do it. And we're going to dig into some numbers here a little bit more on what, in fact, I think I know I do, little spreadsheet here we've made up. So this is what matters when you're talking about growing is how much is it going to cost me to add a company truck? How much money am I going to actually make on that company truck? And just based off a $25,000 month, we had $7,500 in fuel, which was 30%. Typically that's what we're seeing. You may do a little better, you may do a little less, but for sake of calculations here, our driver, we paid him 30%. That's pretty standard too. If it was per mile and you had less miles, it may be a little less. But these are just kind of numbers we're looking at to compare them side by side. Is that after all of our expenses, which were $19,650, see, we made that big money. We made $25,000 in a month. Yeah, we did a good job, right? Well, we actually spent $19,650 to make that money. And we only had $5,350 left over, which was a 21% profit. I think if you can get this number closer to 30, then you're doing all right for yourself. Same thing on the other side here, is that we have a lease operator. and it's not a company truck. We made the same money, but we didn't pay for any of the fuel. He did. But look what we paid our driver, 80%. Maintenance on our trailer, since it's still our trailer, was 2%. And this number may be high. You don't really spend a lot of money on your trailer. It's brakes and tires, and, inspections. And if there's little things that go wrong. If you got an older trailer, you may spend more. But, typically the maintenance on a trailer is cheap. A big bill with a trailer may be $5,000. A big bill with a truck may be 30. So there's a big difference here. And then we didn't pay any insurance because we just charge it back to the truck. We didn't pay any registration because we charge it back to the truck. We still had that trailer payment because we own the trailer still. And we made $3,900. We kept 16%. So $1,450 different. But this doesn't calculate in over here a major breakdown or unforeseen expenses. Which once that comes in, you can easily lose money on this side of the game, whereas over here it's harder to lose money. So my preferred method of growth is using a lease operator. And in my experience, you can get a lease operator, give them a fair lease. Like I said, you're looking for a win-win. If he can win and he's happy and he can make money, then in return you'll win and you'll make money. But all the things we talked about with Jake, you're assuming the liability for that truck, and you still have to put that truck under your compliance program. So that's the drug testing, the MVR management, all that good stuff that comes with hiring a driver, previous employer background checks, all that stuff. You got to learn how to deal with the drug consortium. You still have that with a lease op that you would have with a company truck. So you're not really getting rid of that work for the compliance side, but you're mitigating the risk of a major breakdown on the truck because it's not your truck, it's somebody else's truck. And if it breaks down, the responsibility falls on the lease operator. So at the end of the day, less risk, a little less money, more risk, and a chance to make more money. But you don't always do it, especially if you got an older truck that's breaking down. So, just be careful. Both of them work and they're both proven models. But you see a lot of times these larger companies, look at Prime and Swift and all these big companies, JB Hunt, they're using lease operators and they're using them for a reason. It's because they can make money with them. And it's easier to scale out that way. So, something to think about when you're looking to scale your company. And I guess that's it. So we talked about scaling, we talked about accounting, we talked about, insurance, which is the biggest thing, is finding insurance, finding the right agent, and building a relationship with your agent, because really that's going to be your bottleneck in your scaling. If the insurance didn't care and they would bind any policy, you would just add as many trucks as you could possibly find, because it didn't matter. But that's not the case. You're at the mercy of your insurance. So jumping in, if you're looking to scale with lease operators, I would definitely recommend mentioning that to your agent before you jump in and do anything else, because you may have an issue. But for the most part, that's kind of the way to go. So if you're looking to scale, a couple different options there. Lease ops is kind of our go-to. So hopefully this was informative. Those are your barriers to entry. It really just depends. If you want a lease option, just go find a company that's got a good reputation, sign on the dotted line, read the contract, go to work. If you want to actually build your own company from the ground up, get your own authority and start, you can get a hold of a company like mine, 4 Keys Logistics. Visit us online, 4keyslogistics.com. We work with new owner-operators all day long, and we help new owner-operators grow their companies and succeed. Your success is our success. So thank you guys for joining in. Thanks again to Jake for taking the time to be here. Thanks for everybody that joined in. Frank, thanks for joining. And hopefully you guys learned something from this. And if you have any questions, you can reach me here, Billy at 4keyslogistics.com. So we're going to wrap it up. So again, everybody, thanks for being here.
Thanks, Billy.
Yep.
Thanks, Billy.
Yep, no problem. Thanks, guys.